Hi there, welcome to Kneppy Invest and welcome to the final trading day of the week. In fact, we are near the closing on this day because we have about 30 minutes left of trading, which also includes the closing auction. And I'm going to be honest with you, today has been quite boring when it comes to the movement in our indices, apart from small caps. Small caps have had a pretty good day, up 0.51%, but every other indice is relatively flat. Almost flat, three of them, all either down or up by 0.01%. Okay, the agenda for today's video. Identical to other videos, well, maybe not identical, but very close to being identical to then other videos. We'll go through the ASX today, looking at the best and worst performing sectors, indices, and also companies. And then we'll go through the top 5 stocks of the day. I might show you some charts, and then we'll get to some comments. Okay, so before we have a look at the ASX today, let's have a view of what might have driven our market to go sideways. So let's have a look at Trading Economics website just to see a bit of news flow today. For instance, South Korea cut rates for the first time in over 4 years. China stocks fall as more stimulus awaited. US initial jobless claims soar to 14-month high. US inflation rate slows less than expected. Oil set for second weekly gain. Nothing really to do with Australia right there, and nothing really to drive the markets up or down by a significant amount. Just had a quick look at the commodities, and it's actually been a fairly good day for some commodities, including coal, and not a bad day, although iron ore is down 0.68%. So that could have driven our market down a little bit more than maybe we anticipated. And the last thing I just want to do is go to Capital Brief and just look at some of the news that is flowing in Australia today. Investing news, for instance, don't really have to care about, I suppose we do care about the US Fed squeeze with higher than expected inflation. We already know that. Let's have a look on the right-hand side. Big four banks earnings outlook train solid Jarden. Tesla launches self-driving cyber cab robotaxi eventually. So finally, they've done this. I've been waiting for this particular announcement. So they did a robot event in California. Production by 2026, before 2027. Fully autonomous Model 3, Model Y trips in Texas and California next year. I talked about safety of the vehicle. That's a no blah, duh. Purpose-built autonomous vehicle without a steering wheel or pedals. That's the future. And that's about it. Oh, interesting enough, they're talking about robots here. Did they mention robot elsewhere in here? Yeah. Tesla also showcased its autonomous assistant called the Optimus Robot, a humanoid robot that can be a teacher, babysit your kids, walk your dog, mow your lawn, get the groceries, be a friend, serve drinks, whatever you can think of. I think this will be the biggest product of ever. I think this will be the biggest product ever of any kind, because I think everyone of the 8 billion people on Earth, I think everyone's going to want their Optimus buddy. There you go. So maybe Kathy Wood is right. This is going to be a massive company. It's going to be significantly bigger than it is now, particularly if every single person in the world buys an Optimus robot. Call me unconvinced just now, but who knows? Maybe Elon Musk is right. Otherwise, what else do we have here? Karoon, Santos, and Woodside stocks rise after oil price surge. SiteMinder shares advance as Jarden upgrades stock. Still don't understand why people buy or sell because institution upgrades or downgrades a company. Still don't understand that. Make decisions yourself. That's what I say. Woodside Energy shares rise as analysts expect strong quarterly results. Fletcher Building shares tumble on completed discounted equity raise. Yep, that's what happens. Gold stocks lead ASX gains as bullion prices rise. Okay, so let's get to the ASX today. And we already know what might have driven our market up and down. So it looks like gold might have had a good day. Oil had a good day. Iron ore maybe not a good day. And let's confirm all of that. Now let's have a look at the best and worst performing sectors. And we have seen during the day, the indices up and other parts of the day, indices down. And that's what happens on these sort of days where nothing really driving the market up or down. Now, suppose the way to look at it, the want of the market is to rise. Yes, the want of the market is to rise. So if anything, something has suppressed our market today. Now, if we have a look at the ASX sectors, nothing has really done well or bad today. We're looking at the best performing sector, energy, up 0.39%, And the worst performing sector is real estate, down 0.39%. I have a feeling when I look at the performance of my portfolio after markets had closed, I fully expect it to be almost flat, or maybe up a little bit, or maybe down a little bit, just don't know. And gold has had a pretty good day, up 2.25%. Now that's a pretty good day. And I assume gold, let's have a look at gold chart. Yeah, gold's had a little bit of a dip and then a 2-day rally. There you go. Did not expect that. And the ASX 20 is actually down 0.08%, probably led down by iron ore. Let's see if I'm right. So iron ore, I'm going to say 8 companies up, 12 down. No, the other way around. Oh, no, damn it. Let's have a look to see the worst performing companies. WiseTech, Fortescue, yep. Goodman Group, Aristocrat, BHP, CBA, Woolworths. Where's Rio Tinto? Maybe because of the acquisition of Arcadium, the market's still looking favourably to Rio Tinto. In fact, it's up. And the best performing company in the ASX 20, we have Transurban and Woodside Energy. Not quite oil, they do have a lot of gas. And CSL's had another good day. Go CSL, yay. And QBA's had a good day. And we'll discuss another company called John's Lyng Group. They've done really well the last few days, and there is a reason behind that. Okay, so let's get to the worst and best performing companies today on the ASX. I have not had a look at this, going in completely blind. Sometimes that can be a bad thing, sometimes a good thing. And so let's have a look. A company called Iris Metals, another company I have never heard of, up 94% and pretty good turnover. I'm assuming, now the share price is down 78% in the year, so I already know the chart is going to look pretty ugly. I'm assuming this company released some sort of drilling results. And typically, if the company releases drilling results, I just move on. So up to 86%. What do we have here? Downstream lithium conversion and production of battery-grade LCE. Okay, so not quite production, but the market likes it. And to be honest with you, this probably just goes over my head. Please advised, it has successfully converted its spodumene concentrate to 99.5% battery-grade lithium carbonate. This milestone was achieved using ore entirely sourced from its Beecher project in South Dakota. Okay, so that's a nice story. This is not the sort of announcement that would trigger me to take a position in the company. No, it's not. But let's have a look at the chart for Iris Metals. What was it again? IR1. And we already know the share price is down 80% in the past year, so the chart's going to look pretty negative. It does look pretty negative. Now, over a year period, watch. But if we just zoom in a little bit, share price in a downtrend, on occasion you do see the share price rally, and those rallies fall away fairly quickly or fail fairly quickly. And we've seen about 4 in the past, well, 4 in 2024. Could this be another one? Now, you might have a look at the volume, pretty good volume. We had another pretty good day back in February on pretty good volume, and the share price kept on rising the next few days after that big volume spike. But then because of resistance, share price started to fall again. So there is potential that the bottom is in for Iris Metals. So I will put this into my high volume spec just to see what happens over the next few days, next few weeks, even next few months. Is this the sort of announcement that gets the market so excited the share price moves into an uptrend after being in a downtrend? Let's move on. Ngambie Resources. This is a company I have heard of, but I've never had a deep look. I'm assuming this company also released maybe drilling results again. Let's have a look. Drilling of high-grade gold antimony resource. There you go, gold and antimony. And market likes it. Share price up 46%. Now let's have a look at the chart. Wouldn't be surprising to me if the chart looks pretty negative, although maybe not. Share price up 11% in the last year. And just barely. Now, even though the share price is up 11% in the past year, we're comparing to almost the bottom. Yeah, the share price did reach the bottom in the 10th of October. Yeah, almost 1 year ago. And then was a last little rebound. And then there was the real bottom, though, was in July when the share price got up to 0.7 cents. Really good volume coming in August. Really good volume. I like that volume coming in. And again, that probably means the bottom has been reached. And today, not quite as good volume. And we have seen a little bit of selling today. And the main reason is because the share price When it gets above 2 cents, particularly between 2 and 3 cents, there is a little bit of resistance in that zone for two reasons. Some shareholders bought back in August, September, and quite a few shareholders bought back in November, December, January last year, January this year. So not quite there when I'm looking for a bit of a turnaround in the share price, but it's moving in the right direction. Nagambi Resources, markup of this company is 15.9 million. Other than those two, I'm seeing fairly low turnover, so I'm just going to stay clear of any companies that have a turnover less than 100,000. Westar Resources up 22%. Wow, the share price is 1.1 cents, so more than likely, and market cap's 4.4. So let's move on. And that's it. There's Narada. Another good day for that company. I'm going to have a quick look at Narada's chart, just to see what it's looking like. It's all over the place the last few weeks. Anyway, now let's have a look by market cap, see if there's any big companies having a good day today. Company called Vault Minerals, up 7%. I've never heard of this company. Is this a recent listing? I would assume this company listed within the last few weeks. Vault Minerals. Change of company name. There we go. What were they known before? They were known as... Well, I don't have it here. Yeah, it just says it's going to be changed to Vault Minerals, and they've got the logo of Vault Minerals here. And let's have a look at this investor presentation on the 16th of the 9th. What were they known before? This is the first time I've heard of this company, and that's weird for a company with a market of $2 billion. Oh, Red 5. There you go. Okay, so this is Red 5 plus, who else did they merge with? Red 5 merged with someone else. I completely forget. Okay, so that's Vault Minerals, which is a change of name company. And actually, I didn't even see if they released anything today. No. And let's have a look to see if TradingView has a new chart. No, this is just the Red 5 old chart, I think. Yeah, I have a feeling this is just the old Red 5 chart. And do I have this in my watch list? No. But if I go to my gold watch list, I have a feeling I'm going to see Red 5 there. Let's have a look. Yep, there's red, and it's redded out, funny enough, which means I will have to invalid symbol. Can I change that? I don't even know if you can change it. I'm just going to put VAU. That's a little bit disappointing that TradingView won't change a symbol when a company does change its name. Anyway, let's move on to the next one here. Austal, Adriatic Metals, Cetar, another pretty good day. I'm a little bit disappointed with Cetar because I was thinking that would have been a good trade, and then I completely forgot about it. I should have written it down somewhere. Yeah, it was a beautiful trade here. Share price dipped to about $1.80, and that was the floor in the share price. A nice little support level, and the share price has taken off. That would have been a nice trade early in the week. Anyway, Duratec. Interesting story here. Share price up 6.7%. The company did not release a price-sensitive announcement. I think that was a mistake. Share price is up. St. Barbara, a pretty good day today. Well, gold's had a good day, so they've had another good day. And the chart looks interesting for that company. DGL. I don't remember DGL releasing anything, but I do think that company could be argued it is cheap, but that's just me. And that's about it. Okay, so let's have a look at the worst performing companies today. See if there's any surprises in here. Novatti Group. I'm pretty sure that company has done capital raising. So let's have a quick look at Novatti Group. And more than likely, the capital raising has been done at a pretty big discount, with the share price down 22.4%. There it is. Went into trading halt 2 days ago. Capital raising announced at 9:49 a.m. I'm assuming the capital raising is being done at a share price between about 4.5 and 5 cents. If it's below 4.5 cents, it's a massive discount. So let's have a look. It's been done at, you just got to delve really deeply into these, raising $9.4 million. Capital raising is being done. The very fact that I have to go all the way down at 0.4 cents. There you go. So yeah, so it's been done at a fairly big discount. So even though share price is down 22%, it's still being done at a fairly big discount. And shares on issue are going to increase significantly if they're raising that amount of money. Anyway, let's have a look at the chart quickly for Novatti. Is this any reason to get excited? Don't know why I'm thinking that or even saying that, and I'd say the answer to that is no. To be funny with you, to be honest with you, not funny, to be honest with you, 2 weeks ago, this chart would have been looking pretty good. Then the share price fell off a cliff. And I think, even though there should be no insider trading, I think there was some rumors. Some people knew there was a capital raising coming, and that's why the share price fell from about 9 cents all the way down to 6 cents. We're talking about 33% drop in share price in a fairly short period of time. And then the capital raising was done at a discount at 4 cents, which is like the worst discount you can do. They should have announced the capital raising back when share price got to, say, late September. Share price got above 8 cents, do the capital raising there, do it at 6.5 cents or so at a smaller discount, and that is a brilliant capital raising. This capital raising, not so much. You're significantly diluting shareholders. And that's Novatti. Funny enough, I'll be talking about 2 companies in the top 5 stocks today who also did a capital raising, and I would expect some of you would know at least one of those companies. Anyway, otherwise, there's nothing here. Close the loop down again. Let's have a look at close the loop. It was on the worst performing companies yesterday. It's on the list again today. And this is just an ugly chart. So we had the breakdown below support on the 26th of August. That was a sellout. That was a sell, a warning sell sign. And the share price has kept on dropping down to 17 cents. Okay, close the loop. What else? Nothing else here. So let's have a look at the worst performing companies by market cap. Botanics, EZZ Life Sciences. So I did take profits with EZZ not that long ago, and I sold at about 460. So it looks like that was the right decision, although I could have sold at 490 a few days later. Let's have a look at the chart. Well, I'm not panicking here. It's just a bit of a dip. We've seen a few dips before in the past, and I'm not panicking. And usually the dips in the past, we've seen share price get back to the shorter term moving average channel. So we're talking about 380 to 390. So there could be a little bit more downside when it comes to EZZ, but not panicking, not selling the rest of my position in this company. That was just because the share price went on a really quick run and I just had to take profits. And this is why. Usually you will see the share price pull back. And Worker chart and their volume has been looking really good, and not surprising to see a little bit of pullback today. So let's have a quick look at Worker chart. Worker, WRKR is the company's name. Yeah. This is a little bit of a pullback, nothing much, and massive volume 2 days ago. I love this volume. Something's happening with this company. Someone is interested. And finally, nothing. Well, yeah, there's no finally. There's nothing else here. Okay, so let's get to the top 5 stocks of the day. A few companies did not make it. I'm just going to briefly mention 3 companies that did not make it into my top 5. We'll start with Platinum Asset Management. I completely missed this the other day. Now the time is past 3 p.m., so we're into the closing auction, which is why we've got an indicated price right here. So someone wants to sell on close on Friday. A few people actually want to sell. Someone wants to sell 211,000 shares. Yeah, that's why the share price. I'm going to assume that bid is going to be taken away. It's going to be deleted, or deleted, I suppose, is a good word. It's just trying to force other people to sell, or maybe bring buyers in. So I wouldn't be surprised to see that sell bid pulled later in the next 8 minutes. So what I'm going to do is just leave this open, just to see if it is pulled. We'll come back, if I remember, just before the closing auction is completed. So let's go back to PTM. Now, so a lot of these fund managers are releasing their funds under management, and Platinum actually did that during the week, and I completely missed it at 4:20 p.m. on the 9th, so on Wednesday. PTM, funds under management and business update. I was like, this is going to be pretty negative. Why am I opening it up? And I was pleasantly surprised. The market's not, but I was pleasantly surprised that funds under management actually increased from 12.227 billion to 12.465 billion. Investment performance turned strongly positive in September across a range of investment strategies. Platinum International Fund and Platinum Asia Fund were up 3.3 and 12.5%. That Platinum Asia Fund is no surprise. And I assume the International Fund is heavily invested in Asia as well. So it looks like the better performance for Platinum is because of Asia. I'm making an assumption there, but that's what it seems like. But I like this. I thought funds under management would drop. The market just didn't care. Share price did nothing. And there is a takeover bid for this company, I think, from Regal Partners. And if there wasn't that happening, I don't mind this chart. This is probably the best this chart has looked, Platinum Assets chart has looked, since early 2023. And that was a false dawn, a false breakout there back in January 2023. So this is the best Platinum Asset chart has looked for almost 2 years. What else? One of the companies didn't quite make it. A company called Hotel Property Investments. And they released financial year 25 distribution guidance upgrade, debt facility changes. I saw the word distribution, this guidance upgrade. So that's a special word, upgrade. I became excited, opened it up and went, ooh, is this a possibility? And it was just because they did a debt refinancing that they upgraded they upgraded something here. The distribution, they upgraded the distribution, financial year 25 distribution, to at least 19.7 cents, increase of 3.7% from financial year 24. And I went, it's not that exciting. Then I looked at the chart, I went, chart doesn't look that bad for hotel property investments. Just going to move this, there we go. The chart doesn't look half bad. It's the share price, funny enough, if you have a look, these highs back in early 2023, share price has broken above those highs. And so it's getting to the levels this company saw back in early 2022. So chart doesn't look half bad for hotel property investments. Do I have this in my watch list? I do not. I'm going to put this into my REITs. Is that, I don't know. Oh, it is in my REITs. There you go. And last of all, we have Aurora Labs. Share price up 10.4%. Propulsion system memorandum of understanding signed with OSG Australia subsidiary. I'm not the biggest fans of memorandum of understanding because I've seen these in the past. Nothing comes to fruition, so they seem a little bit sketchy. So this is not the sort of announcement that would trigger me to buy some shares in a company, even if it looks like the share price is breaking out. So let's have a look at the chart for Aurora Labs. And this chart does look okay. Does look okay. I don't mind this chart. I would like to see a little bit bigger volume coming in today. We had the nice little run, the share price up to about 11 cents, pull back from 11 cents down to 5.5 cents, so nice 50% drop in share price. And now the share price is turning around. Now, during that drop in share price, the volume really dried up. That's usually a good sign. Okay, so that's Aurora Labs. I don't know much about this company. Don't know much about Aurora Labs. Okay, let's get into the top 5 stocks of the day. Actually, before we do that, I'm just going to briefly talk about John's Lyng Group because this company's had a few nice days in a row, 1.57%, but they were up 5.25% yesterday on pretty big volume. This has to do with Hurricane Milton in Florida. I believe that's what's driven share price higher yesterday, 5.25%, because that was landfall for Hurricane Milton, and this company should benefit from more destruction than not. Anyway, I'm going to discuss this sort of theme in a little bit more detail when we come to another company in the top 5 stocks of the day. Anyway, so let's have a quick look at chart for JOG. So they have not released anything. Haven't released anything, so maybe they won't benefit that much. But I think the market is expecting some expectations that they will benefit from that hurricane. And then let's have a look at the chart. And this chart looks pretty bad. Share price fell a lot on the release of their results. We did see share price continue to fall after that. Share price got down to as low as 320. Now it's back up to 388. Now, I'm a shareholder of this company. I'm not going to sell my shares because I probably should have been trading it because Share price was in a downtrend before the release of the results. The market was telling us, look out for bad results, and it happened. And I think there is definitely a possible argument that shares in this company now pretty good value, particularly if we do expect an increase in weather events, leading to increasing insurance premiums, that sort of thing, and services that John Lyng Group will provide. Anyway, so that's John Lyng's group. Share price up a lot yesterday, and that's the reason why. Now on to the top 5 stocks of the day. 2 of these companies did capital raisings or announced capital raisings today. The first one of those was Daba. So that means the other one hopefully should be quite obvious to you. Indicator price is down 10.34%. I wouldn't be surprised if the shares don't open down 50% when they go back to trading. Company update and capital raising presentation. I'm not going to open that up because it's 56 pages long. So Daba to raise $25 million via a fully underwritten capital raising or equity raising. Now, what is interesting about this? So 25 million. So the share price right now, should just do the maths, 2.9 cents, 25 million. So they have to raise or increase the shares by a significant amount. Well, I'm not going to do the maths. 25 million. So you divide that by 2.9. We're talking about over 1 billion shares, I think. About 1 billion shares will have to increase. They might even mention it in here. So $25 million equity raising, institutional placement to raise 3.6 million, fully underwritten conditional placement to raise 7.5 million, fully underwritten 1-for-1 pro rata accelerated non-renounceable entitlement offer to raise approximately 13.9 million. Now, what are they using the proceeds for? So don't forget, this company had 25 million stolen from the director or the CEO. Did they get that back? I have no idea. In fact, I haven't read why they need these proceeds for. So this is interesting. Proceeds from the placement are intended to be used for working capital. Ooh, I hate when a company does capital raising and then you just see working capital. That's the reason they're doing it. I don't like that. They have to do it sometimes, but I prefer it for growth reasons. Working capital is not growth. As a company continues to build market awareness of the Daba solution capability and drive sales growth, reducing tax liabilities, supporting recovery efforts in respect of the previously announced alleged misappropriated funds. So it sounds like they haven't got that money back yet, and costs of the offer. Revenue costs and margins have all improved versus previous corresponding period. And Daba now targeting operating cash flow monthly run rate break even in the final month of financial year 25. I'll believe that when I see it. And the new CEO has pre-committed 1.25 million to the capital raising. Okay, and here we go. Total of approximately 1.66 billion new Daba shares will be issued. That means a company would have, after this capital raising, Daba, because currently they have 926 million. So the company is going to have about 2.5 billion shares. Does that math work out? So doing a 25 million capital raising, 3 times that by 3 and a bit, we'll say not 4, we'll say by 3.5. Okay, yeah, maybe. Now, let's have a look at the chart for Daba. Have they gone back to trading? When did they go back to trading? Yeah, they were. I remember now the share price dropped a lot. Share price dropped, on the 17th of April, 54.81%. And share prices kept on dropping after that. You could have sold on that day at a share price between 6 and 7 cents. And a lot of people wouldn't because they went, oh, the share price is down 50%. I'm going to hold on to my shares. Share price is now 2.9. So share price is halved from that day. And it's an ugly looking chart. I have no interest in this company at all. Oh, the other thing I just didn't mention is what price the capital raising is being done at. Okay, where's the price? All I want to see is a price. And I would assume it's at a pretty big discount to make, oh, here we go. So 50% discount to the 5-day VWAP, 1.5 cents. So yeah, the share price will halve with this particular capital raising because it's done at 1.5 cents. And it's not going to be taken well by shareholders, particularly those who have held on during the long term. So that's Daba coming in at number 5. The other company that did capital raising is not coming in number 4. but the company coming in number 4 is Ventia. Now, here's an interesting thing. 2 companies in my top 5 stocks of the day released announcements today that were not marked price sensitive. And I do have an issue with that. And I actually own both companies. And the reason I know these companies released announcements today, favorable, good announcements today, is because I own them. So I go through all the announcements companies I own, and I just saw these marked price sensitive or non-marked not price sensitive. Now, I'm not sure who that falls on, because I believe, and I found this out many, many years ago, the company makes the first, judgment of whether an announcement is price sensitive or not, or market sensitive or not, and then the ASX agrees or not agrees with them. So on occasion, a company thinks an announcement may not be price sensitive, and then the ASX disagrees. Now, that was many years ago, but I do think the initial decision is made by the company. Anyway, Ventia awarded on-demand new developments module with NBN. I went, well, that sounds pretty good. Why isn't it marked price sensitive? And this is, I suppose, a pretty big contract. Announced the award of a significant contract. So here's an interesting thing. They've said this award is a significant contract. That should be price sensitive. Significant. Just the word significant. Anyway, a significant contract with NBN, expected to generate approximately $150 million in revenue over the next 3 years. Anyway, so Ventia comes in at number 4, not only because of the announcement, not only because the company, this announcement was marked non-price sensitive. I have a little bit of an issue with that. Also because of the chart. So I am trading at this one. Now, I originally bought into Ventia because I thought the shares were cheap. I thought the company was cheap. I bought it at 284. So I bought that in June of last year. And if I remember correctly, the PE ratio of the company back then was like 11. I went, that's 11. I think there's going to be some pretty good growth in this company over the next 5 years. Yeah, I think 11 is a low risk price or PE to buy into this company. And share price hasn't quite doubled, but it's getting close. And the PE ratio is about 20, I think, 19.5. So if I had a decision to make whether to buy Ventia right now, I'd probably say no. So 19.5 is getting a little bit rich for me. So I decided, instead of holding for the long term, I'm just going to trade this. And I do have a sell price at $4. And hopefully $4 is quite clear. Might raise that. So I will raise it if the share price keeps on increasing. Probably the next time, or the next price I might raise it to would be around about 440. Anyway, so that's Ventia. I just like the chart. They released an interesting announcement that was not marked interesting, and the chart looks pretty good, and the company's moving in the right direction. And I'm a little bit biased because I am trading it. Okay, on to the other company that released a capital raising today, and that company is Appen. Appen, geez, I forgot. Totally forgot. Let's see if the share price closed at 118. No, it didn't. So that offer was pulled in. I think that offer was pulled. And you see that a lot. You see these really big offers or sells or buys being put in the closing auction, even the opening auction as well. And then they're pulled at the last minute or pulled within the last, in the last minute. I was going to say within the last, I used not the wrong terminology, but when I said within the last minute, I was thinking seconds, and I was going to say or within the last minute. So I was going to completely double down on what I said. Anyway, that's Platinum Asset Management, Appen, equity raising and trading update. So the whole reason I want to include Appen in this list is because of the trading update. Now, let's have a look at the chart first for Appen. And I do have to congratulate the managers of this company, the directors, the board, because they're doing capital raising at the right price. The share, not the right price, at the right time. Share price has gone on a beautiful run. I do think there is signs the share price wants to roll over. Now is the time to do a capital raising. Take advantage of the sudden rise in share price over the last few months. When I say last few months, we're talking about the share price increasing 5-fold since August. That's the time to do a capital raising. And if I remember correctly, the capital raising isn't being done at a significant discount, maybe like a 10% discount, if that. Anyway, so $50 million. Is that all? $50 million unwritten institutional placement. Are they doing a capital raising for shareholders? Yes, they are. Opportunity for eligible existing shareholders to participate by a non-unwritten share purchase plan to raise a further $5 million. So $50 million to institutions, $5 million to shareholders. Okay, so I was being quite nice to the management. Now I'm being a little bit unkind to the management, saying it should be the other way. Give more shares to shareholders, less to institutions. That's the way I look at it. And the capital raising is being done at $1.92, which is not much of a discount at all. The other thing they've mentioned, and probably the most important thing, is a trading update. They are pleased to report his return to underlying EBITDA and underlying cash EBITDA profitability in the third quarter, following successful implementation of cost initiatives designed to manage Appen's cost base in line with available revenue opportunity. Now, my only concern, not concern, but slight red flag, is the reason they are now back to underlying EBITDA and EBITDA profitability is because of decreasing costs, not increasing revenue. In fact, you can see that on the next page. Here it is. This is the group revenue, monthly group revenue in the past almost year, just over a year, and revenue is not really growing. Or maybe you could say or argue it's growing very slowly at $18.6 million in September. So there's not significant growth when you look at revenue, and then they did lose that Google, and then underlying cash EBITDA, it is positive but slightly, and it was positive in August as well. So I suppose that is a slight positive, a nice little positive for Appen, but again, there's so much uncertainty when it comes to this company because they do have to pivot away from their traditional business because I'm not even sure there's much of a future in that. And I'm just wondering what they're doing with this money. Let's have a look. I haven't actually had a look at this. Okay. Proceeds from the placement will provide additional liquidity to fund working capital. Again, I just don't like that. You're using this to fund working capital. Okay. And provide greater flexibility to pursue generative AI-related opportunities. Okay. So it's going to be interesting to see how the market views this. Will we see this the end of the uptrend in Appen? I don't know. And at this point, I don't really care. Now on to a company coming in at number 2. We have a company called Tower. Tower Limited, an insurance company, I believe, in New Zealand. Share price only up 1.64%. Tower updates financial year 24 guidance. This is the type of announcement I am always looking for. And if the market reacted really positively or negatively, I will react to that. Today, the market has reacted mutedly. Not much. They might have expected this to happen, which wouldn't surprise. A few interesting things within this announcement. So, yeah, they are Kiwi or New Zealand. Kiwi insurer Tower has updated its earnings guidance, and it was a pretty big update or upgrade. So, anticipates financial year 24 4-year underlying profit or NPAT to be around 83 million. Up from greater than 45 million as previously advised. So that's a pretty big upgrade from 45 million or greater than 45 million up to 83. And so I saw that and I went, okay, there's two possibilities here. This would surprise the market, share price will increase significantly, or the market expected it, and then we won't see much of the increase in share price. And that's exactly what happened. Okay, so this is the reason why they've upgraded their profit. No large events being recorded in the financial year. And this is something they can't control. They have no control over weather or earthquakes or anything like that. So who knows, in this coming this current financial year, there could be an explosion, maybe not a literal explosion, but a massive increase in natural disasters, and that would negatively affect Tower. The other thing they mentioned here, stronger than expected business performance, particularly in claims. I'm not sure how that works, stronger than expected business performance, particularly in claims. Does that mean they're rejecting claims? Maybe, I don't know. Anyway, they mentioned a little bit more, but that's it. And let's have a look at the chart. And I do remember this company releasing a profit upgrade not that long ago, and the chart looked really good. So I expect the chart to look pretty good for Tower. This is a beautiful looking chart. I think the profit upgrade I remember was back in April, and the share price was 77 cents. Now it's $1.21. So I should have traded that. That was a beautiful trade. It would have been a beautiful trade. This is a nice looking chart, very low volume. I would expect this company to be fairly illiquidly traded. Let's have a look. Shares traded 79. That's not bad. Let's have a look at the trade history. Yeah, some days there's not a lot. Yeah, okay. And the chart doesn't look that bad. It does look like it is traded quite a bit, but we not seeing a real big increase in volume. Okay, so that's Tower coming in number 2. Coming in number 1 is another company who released an announcement today that was not marked price sensitive. And this is a price sensitive announcement. Duratec, share price up 7%. How could you say the announcement they released was not price sensitive when the market reacted like this, up 7%, is not a little increase in share price? And the chart looks pretty good as well. Look at the chart in a second. And volume wasn't that big. So it was maybe, although the volume the last 2 days was increase, there was a nice increase in volume the last 2 days. Okay, I take that back. We have seen a really nice increase in volume. Now, the increase in volume the last 2 days could be loose lips. Maybe people knew this announcement was coming. So let's have a look at this non-price sensitive announcement that drove the share price up 7%, which is the definition of price sensitive. Duratec secures mining industrial sector contract. That's it. It's only 44 million, but it's with Rio Tinto under existing master services agreement. Okay, so there could be maybe an argument that the company saw or had this announcement and went, it's not that price sensitive, but two things could have led the share price increasing 7%. This announcement sort of verified what the market is thinking about this company, and it really could have driven home the positive sentiment that's come back into this company's share price and chart. So let's have a look at the chart now. So there is that possibility that maybe this announcement, if they released it a few weeks ago or even a few months ago, it wouldn't have caused the share price to rise. Because when I see this chart, I see a beautiful thing developing. So this is Duratec. I bought some shares at $1.28. Looked like the sentiment was turning at that point. Put my sell price at $1.32. So I have risen or raised. So now when I sell Duratec, I will sell at a profit. And more than likely, I will raise that again soonish because the share price has taken off to $1.60. And there is a bit of a resistance here because we did see the share price of this company get into this level, this zone, back in about a year ago. The chart looks pretty good for Duratec. So this was not marked price sensitive. And even though I was being a little bit critical, I think there is definitely an argument that maybe it wasn't just the announcement. Maybe there's something else happening here. Maybe there is an increase in interest in this company. Maybe there is a fund manager taking a bigger position in Duratec. And if you do have a look at the volume in the last 4 days, it has been higher than average volume. Not only that, we did see some big volume coming in during the later period of August into September, after a period where there was muted volume. And so, interesting day for Duratec, interesting week, and the chart looks pretty good. Now, I did trade this in the past, by the way. Initially bought this at 55.5 cents back in late 2022. Then I sold somewhere up here, and then I bought back in $1.28. Whether I sold too early, no, I don't think so, because if you have a look at the chart of this company back towards the start of 2024, it did look pretty weak. Share price was in a downtrend. So I'm not going to criticize myself from taking profits in Duratec sometime in late 2023. Okay, so that is the top 5 stocks of the day. I was going to show you a few charts. I'm not going to go to any comments because already at 44 minutes. Okay, so a few charts I want to show you. First one is Credit Corp. I do like this chart, by the way. So Credit Corp, a little bit of pullback. That's okay. I do like this chart. If the share price gets above $17.50, that would be a pretty good move. Share price has pulled back a little bit, but keeping my eye on Credit Corp, starting to look pretty good or pretty interesting at the least. Another chart that is looking pretty interesting is Hansen Technologies. Not sure what happened over the last few days. The share price just took off and has maybe come out of a downtrend. So turning up is Hansen Technologies shares and Demerix, DXB. I like this chart as well now. So I wasn't liking it as much. Looked like the share price was trying to move into a downtrend. And then last few days, the share price has broken out of that potential downtrend, back up to 45 cents. So my concerns about Demeric's chart are now gone, I suppose is the best way to say it. And it does look much healthier, much better than it did only 3 days ago. And finally, Crowdstrike. Okay, so Crowdstrike, I did take a position in Crowdstrike. I thought the market was getting a little bit too overreacting to that big outage that happened. When did that happen? That happened in July. Share price went all the way down to $200. If you bought near that low, you're already up over 50%. And in fact, this chart looks pretty good right now. It's turning up. And this is what happens a lot of times when the market overreacts. It doesn't take a while. It doesn't take a long time for the market to go back to normality, is probably the best way to say it. And Crowdstrike is going back to normality. Everyone's forgotten about that big issue back in July. I can't even tell you what happened. I forget. I can see that massive volume coming through. Some pretty good volume coming through today as well. And the share price was up 5.6%. And this is a good chart. I'm liking it. So I'm glad I took a position in Crowdstrike. The only thing is I didn't buy at the bottom. I could have waited a few days and bought at the bottom. That's okay. And no comments today. Okay, no, I might do a few comments. Let's do James Dean and Dine 15. James Dean, I'll just call him James Dean from now on. Speaking of valuation, didn't buy Dalrymple at 270. It's now 330. You and me, buddy. You and me. This one popped up on my radar, and I went, do I really want to buy this company? How much upside is there going to be with an infrastructure company? Honestly, there's not going to be much upside. So I'm talking about back in like May, June. The chart looks pretty good. There was a nice little breakout, small breakout back in July at about $3. And I went, that's looking pretty good. Share price went sideways. And it's gone from $3 to $3.40, which is a nice 10% increase. And for this type of company, that's nice. In fact, overall, this chart looks pretty good. This chart looks really good. No complaints. In fact, the time to buy Dalrymple was the 11th of October 2022. Share price on that day rose 6.2%, and that was a breakout. And you got confirmation the next few days when the share price actually kept on rising. So could have bought that day at about 230, or even the next few days at 230, 235. And you've probably done okay. You probably also get a nice dividend. What's a dividend yield with this company? Let's have a look-see. Dividend yield is 8%. So it's actually a really nice play. You take a position in a company like Dalrymple when you see there's a nice little breakout, particularly if the company is cheap. I would assume the company might have looked cheap back then. And then not only do you get capital return, you get a nice dividend on top of that. And sometimes you'll be surprised how well you do just with dividends. So I'm doing that with one of my portfolios. In fact, my trading portfolio has a similar dividend than the STW, which really surprises me. My trading portfolio has a similar dividend than the STW. So I'm getting really good capital returns, but also a dividend on top of it. It's a pleasant surprise. I didn't expect that. So thank you, James Dean. I won't answer your other question. Let's going to move on. Pojiki. Hi, Kneppy. Hope you're well. Was wondering what you thought of smart parking. Have been looking at them to diversify my medical heavy portfolio and am attracted to the steady chart alongside rising revenue and steady margins. Thanks a bunch. Well, I'm going to have to agree with you on a few things here. Chart looks pretty good, and I'm pretty sure the revenue and margins look good as well. I have one slight hesitation when it comes to this company. That is the future of parking, and it comes back to automation. How quickly is automation going to happen? Because eventually I can envisage a future where people don't have to park at all. They either own their own car or have this community vehicle that drives them everywhere, or community vehicles that drive them everywhere. Because if you think about it, owning a car is really inefficient. And for me, I might drive my car once or twice a week. That's really efficient. So the best way to play this is either not own a car and just you use an automated vehicle when you need to, or what I think Elon Musk wants to do with owners of Tesla or whatever is you buy a Tesla for, say, $40,000, whatever it is, and then when you're not using it, you send it out into the world and make money not only for yourself, but also for Tesla. I envisage that happening in the future. And if that does happen, what happens to parking? What happens to all these parking garages? Now, I'm not sure what time frame that's going to happen, but I absolutely believe eventually that will happen. So that does or will negatively affect smart parking. And that's probably my only issue with the company, to be honest with you. Now, I'm probably getting well ahead of myself, and this happens to me a lot. I get well ahead. A lot of times I'm way too early to a trend. Sometimes I'm so early to a trend that when the trend actually happens, I'm well out. I'm sick of it, the trend not happening, and then it happens. And anyway, so let's have a look at the chart first for smart parking. And I do agree, this is a really nice looking chart. There's no complaints about this chart. This is a daily chart going back to middle of 2023. Even if you look at the weekly chart, that's a pretty nice looking chart since the middle of 2022. Yeah. Other than that, if you look at the period from 2016 to 2022, nothing happened. But beautiful breakout in probably late 2022, share price in a beautiful uptrend. Or markup is $215 million. And I'm just going to show you smart parking. Just have a look at the revenue. So this is the 10-year revenue history, and you can see corresponding to that increase in share price, that uptrend in the share price, we have also seen a nice increase in revenue for this company. So this is the first thing I look at when I'm researching a company. What is the revenue doing? And then I move on to gross profit margins. Then I move on to profit. Then I move on to other things. So this company, I'm assuming, is profitable. Yep, profitable. Does look like the last few years, the profit have come down. So maybe there is a bit of toing and froing with the margins, but they have been profitable the last 4 years. So again, beautiful chart, nice growth in revenue. My only concern, and these concerns could be really unfounded just now, and smart parking won't have to be concerned about this for many, many years down the road. But I am concerned about the future of parking. It's not a bad thing, I suppose. Open up new areas for living. Anyway, don't listen to me. I could be always wrong. Hi, Kneppy. Okay. I'm going to move on. I'm going to talk about this. There's a few companies I would talk about there, but I'm going to move on to another one. Oh, Brookside started consolidation today, 50-1. Plus Brookside to pursue US listing. Hope you're getting more viewers. So everybody know about you. Well, I'm making them coffee. Keep up the good work. Thank you. Thank you. Promotion 000 Brookside is going through the consolidation. Exactly what they need. There he goes. Consolidation split. Brookside. Do they have a time frame here? Trading and then post consolidation from the 16th of October. Record date 17th of October. Issue date 24th. It's going to be really interesting to see what happens once they go through this consolidation. I have a feeling the share price might go on a run. Just a feeling, but I could be completely wrong. What I'm going to do is go back. I'm sorry to that other person. I'm going to go back to AI McAvoy or Al McAvoy. Hi, Kneppy. Amazing as always. I can't get enough credit to how accessible and approachable you make your content. For a relatively new investor, it's great to find a channel like this that cuts the BS. I'd love to hear your thoughts on ATP, Atlas Pearls, and HLO in terms of value. What's HLO? Is that Helloworld? It is Helloworld. Yeah, the game. Oh, back. Love to hear your thoughts on these two companies in terms of value and Regis from a technical standpoint. Regis something. Regis Healthcare. We'll start off with Regis Healthcare because this chart is spectacular, and I am kicking myself a little bit because I've been following this chart for a while, and I've always been thinking, ooh, now's the time to buy some shares. And the share price has really taken off the last month and a bit. So I started following this chart way back in November last year. Share price was about 280. And I kept thinking, maybe I'll take a position. and the share price has more than doubled since then. But it's okay. There's a lot of opportunities on the market, a lot of opportunities on the ASX. So if you miss one, there's just one around the corner. So that's what I tell myself when I miss a situation like this. But it would have been nice to make a fair bit of profit with this sort of company. This chart is brilliant. Now, my one concern, the share price has gone on a really quick run since the 6th of August. Share price has gone from below 4 to 647. So we're talking about a 50, 60, 70% rise in share price in a fairly short window, and that's not sustainable. So there is a possibility that we might see a pullback in the share price, or at the very least, the share price goes sideways. Now, I don't know about the valuation of this company. It doesn't have a P/E ratio there. So there's a lot of uncertainties when it comes to this company. So has the market got ahead of itself? Oh, maybe the market is expecting some really good or really nice increase in revenue and profit for the next financial year. So maybe the market is looking to the future. So I do have a few questions about this, except the chart. Chart looks pretty good, but again, the share price has just taken off. And I wouldn't say it's too late, but the increase in share price in the last 2 months has been quite extreme for this type of company. Now onto the other two companies. Now, Atlas Pearls, I have actually done a video. No, I have done a preparation for a video on this. Atlas Pearls is all about pearls. Share price 14 cents. The way I look at Atlas Pearls is it's just identical to a mining company. So they are selling a product where they have no control over the price they pay to a certain extent. Now, they have mentioned that there is this auction, maybe twice a year, I think, and they have sold their pearls outside of their auction to get better prices or something. But the main thing is, if there's a lot of demand for pearls, pearl prices will go up and they will benefit. Or if the demand for pearls actually decreases, and this actually does has a bit of relevance to China, because this time last year, for some reason, and I think it was because influencer was wearing some pearls, we saw a massive increase in pearl demand in China. And that really benefited Atlas Pearls. And that sort of interest in pearls died away a little bit, but didn't die as much as I thought it was going to. And it looks like the pearl market has found a little bit of a bottom. And in fact, they did announce their last auction results, I believe. Kobe auction, October 2024. It was better than I thought it was going to be. Now, it's really hard to value this sort of company, because you'll see, if you look at the history of Atlas Pearls, so you notice the revenue, really nice increase in revenue, but if you look at the profit of this company and even the margin of this company, it's all over the place. So this is a profit. It's a really big profit in last year because of pearl prices. But if they can maintain the margins, if pearl prices don't really decrease, and if they can actually expand their production of pearls without disrupting the pearl market, which, the miners do that all the time. The price of the underlying commodity increases, so they ramp up production, which affects the supply of the material or the commodity, and then the price of that commodity then drops in response. So I'm not sure if that's how the Atlas market works. But if you do have a look at this particular company, you could definitely argue this company is cheap. And I've always thought that. So market cap right now is 58.8 million. Enterprise value, now these are numbers from FinChat. I haven't verified these numbers, but I'm pretty sure they're near what they're reporting. Enterprise value 41.7 million. So they have a fair bit of cash. P/E ratio of 1.9. Yes, 1.9. But that's on that profit they had last year, which was 31 million, which is probably higher than normal profit. So I would expect the profit to be maybe 5 to 10 or 15 million, which still means the P/E ratio of this company is between about 5 and 10, maybe even 4 and 10, which is not too extreme for this type of company. So there is definitely an argument that Atlas Pearls is cheap. But again, it's a mining-like type of company. So definitely not high quality, and you might see really big revenue and profit one year and then really low revenue and profit the next year. And that is a problem with this type of company. They even mention it when they're talking about dividends, how dividends could be up and down like a yo-yo. I think what they say is we're not sure what sort of dividend we're going to have because it all depends on numerous factors or something like that. They say something like that anyway. And finally, the chart. I think I still got it in where I bought and sold. Yep, so I bought at 5.7 cents in August last year or September last year, and then sold at 20.5 cents when they released their February results. And that was planned to a T. I was going to sell as soon as they released their results because I expected a bit of a downturn in the outlets market, and it happened. Share price didn't get as low as I hoped it would have. I was hoping the share price would get down to about 6 cents, near to where I bought, and then I'd buy back in. And there is definitely an argument that there is potential that the share price has already found a bottom with the pearl market. And finally, Helloworld. This is just valuation, right? But yeah, let's have a quick look at this overview for this company. So it says market cap is 309 million, enterprise value 170. Does that mean this company has massive amount of cash and no debt? Okay, I want to confirm that. I'm a bit dubious that this company has $162 million of cash. I could look it up easily going through their financial statement. So let's assume that's true. Profit, where's their profit? So earnings per share, oh, okay. Where's their profit here? They don't have the profit here. Let's go to the financials. Have a look at the revenue. And this company was negatively affected by COVID-19. And the revenue hasn't got back up to those levels. But I'm pretty sure Helloworld did sell something, didn't they? And if you have a look at the income, yeah, it's about 30.6 million. But you can see profit all over the place. We'll just assume the profit would be about 20 to 30 million. Just assume that profit 20, 30 million, which means at a market cap of 309, the P/E ratio would be between 15 and 10 and 15. But the enterprise value is much lower, which means the true valuation of this company. So if you did the P/E ratio on the enterprise value, you'd have a much lower P. So there is definitely an argument that there might be some value with this company. So P/E ratio 9.9, price to free cash flow 5, enterprise value to gross profit 0.92, enterprise value to EBITDA 3.82. So those are all really low, suggesting that there is a bit of value with this company. Look at the growth in revenue, earnings per share, and EBITDA. I probably wouldn't look at that because of COVID-19. And dividend yield 5.7%. The question is there value? Possibly with Helloworld. And the chart looks pretty nasty. I would assume, if we look at the weekly chart, share price might be getting down to a long-term low. Okay, so the share price has been trading in this channel for a few years, well, 4 years. And the bottom of this channel is around about $1.60. That would be a nice time to buy. It briefly went below $1.60 back in January 2023, got to about $1.40. But I'd say at any price below about $1.80 might be some nice buying for Helloworld, just based on valuation. But it's interesting to see that this company has been trading in this range, and the top of the range is about $3.30. We'll say $3.20. So there is a nice potential capital return if the share price gets towards $1.60 and then can make it back up to the top of the trading range. So you're talking about 100% return, and that's not including dividends. So this is interesting. I'm glad you mentioned this company because the chart looks interesting. If the share price does fall a little bit further, valuation looks interesting. So thank you. Thank you very much, L. McAvoy. And that's going to do it for this video. If you have any thoughts, any questions, and don't forget, I'm not a financial advisor. So if you have any thoughts, any questions, make sure you seek out a financial advisor who can answer all these thoughts and questions you have. And if you have any questions or thoughts for me, leave those in the comment section of this video. Otherwise, I am not a financial advisor again. So seek out someone who is, and they can speak to your own needs. That's it for this video. Have a good day. Bye.